to TradingLounge and the US indices for the 6th of October. I thought I'd just start with Amazon today on a 100 tick chart here because it's got quite a clean count here to take us one way or the other, and it will just be a good indicator to keep an eye on. So first of all, the move down through here we can look at as an ABC correction for wave 4 being completed, and from wave 4 we can just keep rising and moving up into wave 5 further up yonder here, above wave 3 here. Now the thing is that wave 4s can get complicated, as you know, and we may just end up with a larger wave 4 coming over this side over here. So this current move up through here, I just wanted to take a look at this. So if this wave 4 here was really going to be come into play, so to speak, then the move up through here would be the A wave here, the B wave here, and the C wave here for the B wave here. So all of this down here would be the A wave here. So we could put that down here as the A wave here, and we'll just dull it out. We'll also dull this B wave out here. And yeah, that will be fine at that point. So yeah, I mean, the good thing about this though is that from this wave 2 or wave B here coming up to this top here, we have 5 waves here. So quite simply, it would turn bullish if this top here was taken out. But while it remains under this top here, then it's got the ability to move down from that point because it's left as an A wave, a B wave, and a C wave to this point with 5 waves in here. So it's a real clean cut way of looking at the market. I guess I just really wanted to make it simple. Now, if it was going to be impulsive to the upside, well, then we'd want 5 waves. Now, 5 waves would be 1 and 2 and 3 and 4 and 5. Now, it doesn't have to be counted like that. We could count it differently. We could count it up for 1 and back for 2, up for 1 and back for 2, and so on, you know. So there's 2 different ways we can count it as an impulse wave, but it still leads to the same effect. So I think we could just use this as a bit of a roadmap here. If this top is taken out here, then you'll know that we're highly likely into a impulse wave to the upside. If I have a look at the Nasdaq for a second or two, it's the same sort of thing here. We're looking from the top here down as an A and a B and a C wave through to here, and then we're looking for 5 waves up here. I've got 1 and 2 and 3 and 4 and 5 here for wave 1. We're looking for wave 2 to pull back into this space here. As I may have mentioned yesterday, I can count the A, the B and the C in here. Didn't quite make a new low here. So it's still possible that this, from that high to this low here, that's the 61.8%. So it's still possible, if I just copy that for a moment and have wave B over here and wave C over here, this is what we need to give some consideration to as well. Okay. However, if we do get support on the 11,500, which we were basically considering, well, that's where we would take action for this particular market anyway. If we got a nice support here, then we'll go straight up from that point. And then this impulse wave here would play its part in all of this. So yeah, so on the tech side of things, no change. We need the market on the 11,500 for what I call safe trades, and you know, looking at one of the big stocks here, we could probably look at others, but I think this is one of the cleanest here. So yeah, if that top goes out here on Amazon, then it's looking healthy to the upside. It just gives more credibility to this wave 4 if this top is taken out. It's that simple, really. So I'm really just going to leave it like that, and that's also going to help the S&P as well. So I'll move these out of the way, and then we'll come to the S&P. The S&P is, well, my count is 1 and 2 and 3 and 4 down to here. We know that wave 4 can drop lower into the 38.2% retracement level, which is a little bit lower here. So it's possible that this 3-wave move here can rally and then drop back down into this space. And that's why the Amazon high that we just had a look at is quite important. But as far as the crow flies, this wave 4 here is looking good. So obviously the higher it goes, the more confidence it gives well, everyone. Let's just move in and take a closer look. So once again, we've got the A, the B, and the C wave down here for wave 4, and then 1 and 2 and 3 and 4 and 5 here, and then pulling back into the 50-60% retracement level. It didn't really come down into the 61.8% mark, but you know, we always expect to bounce off number 3 when it comes down. So that's all playing out quite nicely. And one of the things here is that it's, you know, testing its old high here for this. So that's really quite healthy, isn't it? So it's, you know, if this was going to be a wave 2 here, then we could look at this as the A wave here, the B wave up to this point, and then the C wave down here. But as I mentioned yesterday in the intraday here, it does count really quite nicely as an ABC pattern in this little move here. So I was quite happy to label it like that. And as also mentioned too, that the 3400 here, as you well know, is the old high, and it's also the balance point as well. So a bit of an overshoot pattern here. So normally when we approach a level or an old high, we can have 3 things occur at the level here. So 2 of the patterns that we look at, they would have a reaction here. But we didn't get that reaction. The market just, well, in a nutshell, really just went straight through, didn't it? So really that brings in the overshoot pattern, where it doesn't stop at the level here, and it still moves up and still creates the high above the level, and then it swings lower at that point. But what it does is that this level through here, in this case 3400, really becomes the balance point for this whole pricing activity here. And this is where we are now. We're in just, you know, in this space just here for this. So we've still got a little bit more work to do here to clarify things properly, but we're on the right track. And just as a rule of thumb, I mean, I wouldn't even call it a rule, but the distance a market goes to the top here is normally the distance it will go below here, just roughly to give you a bit of an idea of that swing. It's not out of proportion, put it that way. So yeah, that overshoot pattern is the third pattern that we use. So the first one is the classic trading levels pattern, which is this one here that you know, and then we have the variation on this where it doesn't drop below this low here. It just stays and sits on support there like this here. So it's good to know these 3 patterns because they're common and they're useful and they're practical, and you know, they perform. So it's a good way. So, and what we're looking for here is we're looking for the first high above the level now in this case. So we could look at this as the arrival, the reaction here, and the first high above the level coming into the, however high it goes. There's you know, we can make, we can get into that. So if we're looking at 34 here, then group 1. So what is group 1? Well, that's 1, 2, and 3. So 10, 20, and 30 in this case. So if we get support on 34.30, right, then the market's going to go up from that point, not come back. But if it fails to find support on 34.30, then it's going to create the first high above the level. And sure, look, it could spike up to 40, you know, and then drop, but it still needs that tested support sitting on the 34.30 for that. Also too, we've just got to be a little bit mindful with this wave 4 here, is that yes, we've got 5 waves off the low here, which we recognized, and being having 3 waves here, as I may have mentioned before, we could also look at this here as an A wave, a B wave, and a C wave up here. and then have 5 waves down, so more of a flat pattern in that regard. So we could have 5 waves, say, up into this space here, and then still have another 5 waves down here as a flat correction. So it's flat because it's just a regular flat. It's sort of, you know, fits in that flat sort of space in that regard. So we need to be mindful of that. Okay, so that's not out of the woods yet, but you know, we just need to trade up, and you know, it can be a bit scary doing it off the lows and this and that, but if you use less capital, then it's easier, and then you build on that, of course. So let's just go into the hourly chart and pull this apart. So yesterday we looked at this wave 4 low being in play here with 1 and 2 and 3 and 4 and 5 here for 1, an A and a B and a C here for wave 2. It could have gone up to this point here, as I mentioned before, and then dropped from that point. But like I said, we did have a nice ABC pattern here. So we could go long above here. That's the safe trade. Obviously it's not, you know, it hasn't performed humongously, but you know, I knew where we were with all of this, in that, you know, we have to take that, and what we'll look for now, I can still see this has got 1 and 2 and 3 and 4, so we're going to create a little high here for this, and then have a little corrective pattern here. I would like to see a further high for this, but at the same time we'll look to take that high there as well and add to the position. Because the thing is, you know, is that because we've got 5 waves here, we're not going to get just a little tiny 5 waves here and that's it, and finished at that point. You know, we'd have to get more than that, you know. We'd have to get some sort of equality between this one and the next one. So, yeah, we should see this just move higher again here. So, yeah, from this wave 1 here, an A wave, a B wave, and a C wave down here for wave 2. And I have to go back over this, but my first instinct to count this was wave 1 here, wave 2 here, and then one and 2 and 3 and 4 and 5 here for the third wave, a nice complicated fourth wave. And I remember yesterday talking about this, we said, oh, that looks a bit bullish corrective in this space here, as wave 4 here, and then up for wave 5 for wave 1. Wave 2 is a little bit small, so I'm sort of scratching my head about this. I don't know if this is the right count, but the takeaway here is that we're getting impulse waves to the upside, right? So we have to go with that, you know, that's surfing the waves, so to speak. So I can see here that we've probably got, well, let's just count this as wave 1 here and 2 here and 3 here, and this will be wave 4 here, and we'll see wave 5 move up into this space here and give us that little first high above the level. I don't know if that's the first high we're actually looking for, but at the same time, we do need to look to go long on that there. I mean, you can use the top one or you can use the second one there. And this is a classic trading levels pattern, the arrival, the reaction, the first high above the level, and an ABC pattern. And then I would assume that we'd just push up from that point. But this is where the Amazon thing comes in as well. You know, we really want to see Amazon push up from this point here and take out this high here to take us past this A, B, C correction here. Once we get past that, then it just breathes a little more hope into the trend. So that's what we're considering at this stage. Look, that's about it really. That's about the best I can do at this stage with all of this. I think we're in the third wave here, but we still just got to keep gathering evidence for all of this. And I'll sort of reinvestigate this particular trend here because it can be counted in different ways. But yeah, let's just see if we get I'm pretty sure we will get past this level here at 34, and with that as well, I'll just borrow these from down the bottom here. We can put that kind of close enough. I mean, the funny things with the levels, is that, I kind of use them and you'll notice them and things like that. But until you put them on your own chart, then you don't really get to see it that much, And they do break down the problem, Just for instance, this 34 here, the swing number for that, the swing range for that is group 2 and group 1 here. So if this here became the retested resistance here, this group 2 here, then we know that the market will be coming down further from that point. So we can keep the stop there. So until 34 becomes the tested support, we can't really move the stop. You're better off just taking a percentage at the higher price. The other point here with group 1 here, if we get a tested support on top of group 1, then you know that we're going to be going up, well, to the next level, which is number 5 here, which is not a long way away. But the real takeaway from this is that close enough. The takeaway from this, if you get tested support on top of 30 here, it's not so much that you're going to be moving to the 50. That's good news if you're long, of course. But having tested support on top of number 3 here, the 30 here, it means that the market's not coming back to the 34. That's the real beauty of it all. So, yeah. Make sure you put the levels on your chart, just put them lightly in the background so that they don't interfere with anything else that you're doing. They can just be an addition, and just put them lightly on the back of the canvas, so to speak. Yeah. Alrighty. I've waffled on long enough, so appreciate you tuning in. Thanks very much. Cheers.